Good afternoon. This is Julia Gibson with Entoro Capital. Thank you for joining us this afternoon for the Q&A session with Kentucky Whiskey 2020 Digital Fund. Allow me to introduce you to the President and Managing Partner of Wave Financial and Portfolio Manager, Ben Tsai.
Hello, everyone. This is Benjamin Tsai. As Julia has mentioned, I'm the portfolio manager for the Wave Kentucky Whiskey 2020 Digital Fund. So I'm here to talk to you all about this fund today, and I thank everyone for attending the event. So let me jump in quickly with just quickly on my background. My background is in traditional finance. I spent 15 years after business school in Asia in finance, 12 of that with Merrill Lynch. I ran structured products across Asia, and then later on, I ran the commodities business. By that point, it was Bank of America, Merrill Lynch at that point. After that, I moved over to asset management side, to the buy side, and I spent 3 years with AllianceBernstein as the head of alternative investments in Asia. About 4 years ago, I moved back to the US, and I've been exploring asset management. And 2 years ago, we opened Wave Financial as a spinoff of Wavemaker Partner, which is a 2-decade-long VC venture. We spun that off and added an asset management arm to it, focused on alternative assets, blockchain, cryptocurrencies, and so forth. So this product here that we're talking about today is a part of that collection. It's something that I've been working on for about 1.5 years now. It's something I'm very proud to introduce to everybody. So just to jump right in, why are we looking at whiskey? Actually, when I started this exercise, we were looking for the best alternative investment of a hard asset for providing to our clients. We're a California registered investment advisor. We take our fiduciary duty very seriously. So we were looking for the best investment product that we can provide to our clients. We looked at clean water. We looked at carbon credit out of Indonesia. We looked at Japanese racehorses. My business partner actually knew someone who owned Picasso, so we looked at Picassos and doing fractional ownership of that. We looked at real estate. I'm personally a real estate investor here in Southern California, so we looked at that also. And we looked at whiskey. Whiskey was something that after spending a lot of time in Asia, specifically Japan, I looked towards potential exporting whiskey to Japan as a business. And in the end, I didn't pursue that, but I was familiar with the whiskey space. So we started looking into it. And what we found is a very attractive return profile in the investment of whiskey. If we were to go buy a barrel of whiskey from the beginning at the creation process, we pay less than $1,000 and add on insurance, storage, and all the operational details for 5 years, we'd be at a little bit over $1,000. And then in 5 years, that barrel is worth a little over $3,000. So we're looking at a 3x return on that barrel. And that's with today's prices. We believe that the prices would actually rise even more. And therefore, our estimates of the numbers are really more in the $3,000 to $5,000 range. When we first learned of this return profile, I was very shocked. I mean, this is, compared to traditional finance, compared to real estate that we invest in and so forth, this is an extremely attractive return profile. Going, 3 to 5x over 5 years in a very consistent basis is a great return profile. So I ended up doing a lot more research. I ended up flying out to Kentucky 3 times in the first 6 months of our project. Spent a lot of time with the local distillers, spent time with the Kentucky Distillers Association, multiple visits. They're very friendly guys. You have a meeting with them, they're handing you free whiskey. And I said, why do you guys do that? And they said, the distillers give them cases of free whiskey for them to hand out. It's their way of making friends. So I said, great, let's be friends. So, we got a lot of, free whiskey from that and great information. They were excited by financial players like us looking at doing more investments into products, into Kentucky in general. Spent a lot of time with consultants, advisors, brokers, lawyers. I even spent time with, boutique owners of boutique liquor shops, very high-end liquor shops. For example, there's a place called Justin's House of Bourbon. They have a branch in Lexington and one in Louisville. I was at the Louisville branch. I was speaking with the guy at the counter, and then they have a little mini bar there, and somebody sitting at the mini bar basically started telling me all about whiskey. So my first reaction was kind of, who are you? And he said, oh, I'm Justin. I own the place. So, that started a very long conversation. I spent an hour and a half, 2 hours with him, really talking about whiskey, his collecting, his career path through this whiskey space. He also showed me his fancy collection of rare whiskeys and some of the things that he had on consignment. He had a license to sell in that space. He showed me the little tasting room in the back. So it was a very exciting thing to look at the end product and the fervor and the excitement people have with high-end whiskey. After that, I also spoke with, the various different players, and we got very comfortable that our assumptions are correct. Just to be sure, we also hired a consultant. She is in the Kentucky whiskey space for a long time. Her family's been in that space for a long time. Her dad was a master distiller, I believe, at Brown-Forman, and so forth. So she's been working in the whiskey space all her life. So she did some independent research for us. And she's also able to show us that through her research of market data and also her speaking with brokers and so forth, that we actually have the same type of data. We're looking at a 3 to 5x return over 5 years. We're looking at an increase in value in the super premium space. And most of the liquor that you see are in the super premium space. In the super premium space, we're looking at 7.5% CAGR growth. That means every year we're looking at about a 7.5% growth, over the next few years. So for us, that's very exciting. That's something that, we think it's very strong support for this investment class. The other thing we found very interesting, which is unfortunate because that wasn't a focus for us, was that when we started marketing this fund earlier this year, we were in the middle of COVID. Now, obviously, when I started this project, there was no such thing as COVID. Nobody knew about it. Nobody cared. And, middle of last year, things were looking quite good. So once the onset of COVID came, I have a lot of investors that are asking, what are the impact of COVID, of the pandemic and so forth to the alcohol industry and to whiskey? So the first thing we looked at was historical data. I have on the screen is a historical data of the price and also the volume consumed over the past 10 plus years. It goes back to 2007. The only very slight dip, I would call it a flat year, was 2009. Volume of consumption was down less than 1%, and price in dollars of consumption was down 1.4%, a very mild decrease. And it's been a significant increase in every single other year from 2007 all the way through 2019. And so we see that that's a very good counter-cyclical type of investment that wasn't impacted by the great financial crisis in 2009. It was a very mild drop. In 2020, with the extended COVID pandemic, we're actually seeing an increase in consumption of whiskey. We've seen anecdotal data from different places of consumption increasing significantly. We've seen a 17% increase in sales locally here. We saw that in the papers. We're also seeing, I'm speaking with a lot of people in the industry, and they're seeing a really great year from a sales perspective. So, and I don't think it's a surprise for everyone that people are drinking more during the pandemic. So from that perspective, demand is up and the support is very solid for this increase in value. And just as a reference point, I also have it on the slide, volumes in 2009 for Scottish whiskey also reached record levels during the last financial crisis. So we are seeing that is a globally consistent aspect and not just very localized. So now moving on to a little more detail. So as I mentioned before, we buy a barrel of whiskey for about $1,000. We hold it for 5 years. It goes to $3,000 to $5,000. That's a great return profile. And what we've decided to do is we've decided to package that in a fund. The fund, with our, even including our fees and expenses associated with setting up the fund and management and so forth, we're targeting a net IRR of over 20% per annum across the life of that fund. And that is using the conservative $3,000 price. And if we were more aggressive in pricing, we're going to see even higher IRRs than that. The 20% IRR also represents roughly a 2.3x investor equity multiple, which is also a very important benchmark. I think it's easy to achieve high IRRs if the holding period is short, but with our 5-year span and 20% IRR, we wanted to show that by also looking at the investor equity multiple, which is 2.3 times. So the idea is we're going to take the investor money, we're going to buy whiskey, we're going to put it in storage, we're going to hold it as it ages. And at the end of it, we will sell the whiskey, and our sales would probably start around year 4 and wrap up around year 5, maybe dragging on to year 6, depending on specific market conditions. So across roughly 5 years, we would basically be enjoying the gain in value of whiskey sitting in a barrel through the aging process. And the first question that I get a lot, and I'll go into this right now, is that what do we do with the whiskey after that? So what we do is actually we take the whiskey and we sell it back into the market. The whiskey market is actually different from the wine market. It's actually a lot more fungible. I think that's probably the best word to use. People trade barrels all the time. They blend whiskeys together. You would never see that, wineries trade barrels with other wineries from different regions, or white wine, red wine, mixing it together and so forth. There's very little of that. And so it's a lot more focused on kind of their own, region, their own winery, their own vintage and so forth. And I had a question this morning, actually, with regards to vintage. There's really no vintage in whiskey either. Every year is a good year for corn, I guess. Corn, wheat, barley, rye, and I can get into details of the recipe in just a bit. So when we sell in the market, there are 4 main markets we can sell into. One, we're working with a specific distiller, which I'll talk about later. They can potentially buy the whiskey back. They created the whiskey themselves. We're using the recipes that they've perfected. We're also storing it in their warehouse. So that first component, the first buyer could potentially be them. Their sales is doing very, very well. So if they needed more whiskey 5 years from now, we could potentially be a source for them to buy from. We would sell it to them at market price. Our loyalty lies to the fund, lies to our investors, where we have fiduciary duty to our investors. So we are in no way incentivized to sell to them in any discount from where we would otherwise get. The second channel is other distillers. In Kentucky, actually, various distillers buy and sell barrels, and then they blend it with their own flavor to get their own flavor profile. Sometimes they're short on rye whiskey. Sometimes they're short on higher alcohol content whiskey or lower alcohol content whiskey, or slightly more age or slightly less age. They will buy and they will blend it with their whiskey to get to the flavor profile that they want. So that is the second area that we can sell to. The third area are called NDPs, non-distiller producers. These are whiskey bottlers and producers that don't own their own distillery or their own long-term storage. They will buy whiskey that's already aged, and they will blend it to the flavor profile they want. They would then sell it and market it. And their strength is in the blending, the sales, and the marketing, and not on the creation and the aging process. So there are a lot of brands that do that. Some of the larger brands include people like Bullet and so forth. And some of the high-end brands that you know of are actually created by other distillers and just sold under their name. For example, Blanton's, after Blanton's became successful with their brand, they don't actually make their own whiskey. They're really more of a marketing brand, really focused on marketing to Japan. Also, Pappy Van Winkle, the family and the label no longer owns their own distillery. They're part of, they take production from Sazerac. Sazerac makes the whiskey on their behalf. So, there's a slight disconnect from the brand and the actual original creation process. The last category is actually similar to the previous category, which are international buyers. A lot of international buyers would come in and buy whiskey barrels and put the content in the tanker and ship it back to their country, bottle it in their local locale, put their own labels on it, and sell it through their own distribution channels. In the US, vertical integration is not allowed because you have different layers, tiers of licensing to do this. But in other countries, typically the producer and the end bottle makers, all the way down to the bar owners, can be vertically integrated. I know, for example, in Japan, Suntory owns bars that you can drink at. Of course, you're drinking Suntory whiskey at the Suntory bar and so forth. So very vertically integrated. So in international markets, that's something that's commonly done. The biggest export markets are Spain being the biggest market on the export side, Japan number 2, and Australia number 3. European buyers like Spain typically buy younger whiskey, typically 2-3 year on, and they will bottle it for a lower end product sold as American cheap whiskey, I guess, for lack of a better way of saying that. Japan is actually on the other end of the spectrum. They typically buy 8, 10, 12-year aged whiskey. They put it in a premium product like Blanton's. They sell it at a higher price point, and then they consider it kind of fine American bourbon whiskey. And Australia is a bit of across the board in terms of all that they consume. So it's a wide range. We're also starting to see demand come in from China and from India. We've seen we've heard anecdotal stories of Indian buyers coming in the market wanting to buy whiskey that's already aged in large quantities so they can bring it back to their own country and bottle it through their channels and sell it. I'm not sure if everybody knows, but India is a very big market for whiskey. They traditionally drink Scottish whiskey, a lot of Scottish whiskey. It's an aspirational thing to be consuming single malt whiskey. For them, it's a status thing, and maybe it comes from the colonial days or something. But historically, that's been a big market for whiskey. And they, I think there is an interest to branch out within whiskey to see other things that are available, like American bourbon and rye whiskeys and so forth. So we're quite excited. There are a lot of people in India. There are a lot of rich consumers in India. So we're looking for that opening up, and potentially, the Chinese market opening up. So kind of moving on. I would like to talk a little bit about the distillery that we're working with. We're working with a distillery called Wilderness Trail. They're one of the, I guess, what you could call bulge bracket distillers in Kentucky. They're part of the Kentucky Bourbon Trail. It is a map that the Distiller Association makes and distributes at airports. On the cover is Wilderness Trail, along with the likes of Jim Beam, Four Roses, Wild Turkey, and all of the big brands that that in the Kentucky bourbon space. They're well known. They were founded in 2006 by 2 guys who are fermentation experts who've been in fermentation for over 20 years. They've been consultants to wineries and whiskey distillers and industrial alcohol use people and so forth. So they're experts at converting sugar to alcohol. And they've taken their expertise and built Wilderness Trail. It's a great place. I'll show some pictures later. They are also they are also the 2 owners, or the 2 founders, have also just won Ernst & Young's Entrepreneur of the Year 2020 for their region. So they're good operators and they're well recognized for that. So moving on, here are some pictures of the distillery. These are pictures that I actually took when I was at the distiller about a year ago. This is the upper left-hand corner is a picture of the tasting area. They have a little gift shop, a tasting area where people go and can taste different types of their whiskey. I always thought that that's very interesting, and they have a very large space to be able to do that. The center picture is actually the beginning of the production process, and I'll get in a little bit into the production process, even though it's not so relevant for our fund. The production process is this. At the beginning, you have a cooker. You put in the different grains that you want, add water, and cook it. It's a day process, and the cooking breaks the sugars out of the grains into the soup. So it's a sweet soup, I guess. The picture on the right-hand side is a picture of a 4,000-gallon fermenter. It's very high. It's 2 stories, actually. We're standing on the 2nd story scaffolding looking into it. Basically, the goop that you've cooked in the first day, you dump it into the fermenter and you add yeast. And basically, through the fermentation process, the sugar converts to alcohol. That process typically takes about 2 days. So, we've spent a total of 3 days fermenting, cooking and fermenting the what is going to be whiskey, the stock that will become whiskey. Moving on to the next slide, the lower left-hand picture is just more photos of the fermentation tanks. Once that fermentation is done after 2 days of fermenting, we put that through the stills. That's why these places are called distilleries. They have these tall copper columns that are called stills, and the liquid gets put through that. The alcohol is distilled out of it. The rest of the grains and the junk basically is dumped out. And the alcohol is distilled at about 140 proof, plus minus, depending on the outcome of the pots. And 140 proof is 70% alcohol, and they would add a little bit of water to that for consistency to get it to 120 proof, which is 60% alcohol, before putting that in the barrel. And that's really the fourth day of process, where there's a distillation and put in the barrel. Because of how much alcohol there is, it's actually a little bit dangerous to keep high levels of alcohol around because it's flammable. The alcohol that gets distilled is immediately put in the barrel and put into storage. In the lower right-hand corner is a photo of the whiskey warehouse. It's the storage. The whiskey goes on the shelf after that 4-day production process, and it sits there for the next 3, 5, 7, 10, 12 years. So from that perspective, the creation of whiskey actually takes only 4 days, but the aging is where the bulk of the work actually comes in. The whiskey goes into a barrel that is made of freshly made American oak. And through the aging process, it is kind of interacting with that oak. And that's actually a very important point. Every day when the sun comes up, the temperature rises, the alcohol is absorbed into the wood. And then when the sun goes down, the temperature drops, the wood actually releases the alcohol back into the barrel. So that process of absorption and release over and over again over years gives the alcohol the flavor, the profile. It absorbs some of the wooden flavor that comes out. The inside of the barrel is also charred, so it gives it that charred flavor, smoky flavor to the alcohol. At the same time, through that process, the alcohol and the liquid itself also evaporates a bit, so it gives it a more mellow flavor over time. So kind of moving on. This last photo is actually very interesting. What you see are just more barrels, but from what we see, we're very excited. These are photos of the first sets of barrels that I've already purchased. Our fund actually owns these barrels. As you can see in the stamp that's on the barrel in the upper right-hand corner, it says WAV, and that's our inventory. We've already bought 1,500 barrels of whiskey already put away in the warehouse. And that's something that's very exciting to me. We made 1,000 barrels of wheated bourbon in September, and we're making 500 barrels of rye bourbon in December. So I guess that 500 isn't done yet. And then we will be ordering more whiskey as more money comes in. I think we have enough to put in another order this month and some more orders next month. So that's very exciting. I got all excited by these photos. I even have one printed as a canvas, and I have it on my wall here just for souvenir instead of anything else. On the right-hand side, the little samples that they took of the alcohol, actually that's sitting in my house also. And those are also, for lack of a better way of saying it, they're souvenirs from barrels that have been made on our behalf. Those are actually not very good to drink. They call these the white dog, which is the initial liquid that goes into the barrel. Because they haven't gone through an aging process, it's a clear liquid. It doesn't taste very good at all. So it's really for souvenir, not for me to drink. If I need to drink something, I drink the aged whiskey. So just to get into a little bit details of the fund itself, we've set up a U.S. entity, a Delaware entity that'll be the master fund, and all U.S. investors would invest into this. The master fund would be the owners of the barrels. The barrels will be stored at Wilderness Trails warehouse. It's a bonded warehouse, and we're officially on title as the owners of the whiskey. We also have an offshore entity in Cayman for offshore investors who are interested in investing. We have capacity for, about $20 million of whiskey, although because of COVID, we've scaled that down a bit. We're realistically looking at just getting, 5 to 10 million in the door, and that's our current goals. We're closing this deal at the end of December, so that'll be our last close. So I hope that, we can have discussions with potential investors before then. Minimum investment is $100,000. If that is too high, please reach out to me. Happy to have a chat on that. And the last thing is just an extra additional feature that we've added to the fund. We've decided to tokenize the fund, as in we put the ownership of the fund on a blockchain so we can better track it and provide tokens only for those investors that are interested. I think it is a feature that may not be suitable for everybody or interesting to everybody. So just want to mention that that's an optional feature. If there's interest, they can pick up, the clients can pick up their tokens. We will have the tokens be listed. We've already signed a letter of intent with INX, the biggest exchange in the US for security tokens. We'll be listing there for trading. So that trading will become available. We'll have this whole issuance and everything done at the end of year one. We'll issue after year one because we have a 1-year lockup due to US security rules for private placement. Once that's over, the tokens will be available for trading. So normally in a private equity fund, when you invest at the beginning, you're basically stuck holding that investment through the life, and in this case, 4 to 6 years. But with our fund, with that tokenization, there's a possibility of potentially trading those tokens so you can get out of your position earlier if you need to. I'm also a bit excited about that because I'm wondering if there are other distillers that may use that feature as a hedge for their lack of putting barrels away. So happy to talk about that more if people have questions there. One thing I would mention is our fund, our token, our whole program. We just recently won the award for Best of Class Asset-Backed Tokens Award during the Hong Kong Blockchain Week 2020. And it's something we're very proud of. We competed with over 50 other projects for this award, and they found our project to be, put together best and most interesting. We went through a pretty rigorous process of not only submitting documents, but I was interviewed by a committee as a part of the review. So, quite happy with that. I'm going to stop there. I think there are various things that we can talk about with regards to the fund, but I've spent 25 minutes talking about it already. So I'm stop here for a moment. First things first, our system, we can take Q&As. We have a Q&A section, and if you type in your questions, I can see them. I'm happy to answer them verbally here with everybody. Unfortunately, you won't be able to see other people's questions. So if you type a question, I'll repeat it verbally. Second thing is you can raise your hand. We can we can unmute your mic and we can have a verbal conversation if you don't want to type it in. Third thing is my email address is now shown on screen. It's Ben, B-E-N @wavegp.com. Please feel free to email me if you want more information. We have a much more detailed deck, I think 3 times as long, on the various details of this fund. We're happy to share that with you. You can also reach out to Julia and so forth. Okay, great. I've got a first question already. The first question is, why does this market opportunity / inefficiency exist? It seems like a sales leaseback for booze. I think that's an interesting way of looking at it. It's not quite a sale and leaseback in the sense that we're actually the owner of the inventory. So the distiller themselves are not doing the sale and leaseback. They're not really. There's no right for them to call it back. Certainly, if they wanted to, they can buy it back, but that mechanism isn't set up automatically for that. So it is, for what it's worth, a completely independent ownership of the whiskey. And we also have access to the liquid markets through brokers and so forth. So we can sell it to whoever we want. There's not a leaseback component to that. I think to actually answer the specific question, and a number of people have asked me this, especially the finance savvy people. The question is that if it's so profitable, why don't they just do it themselves? And then this is a similar question as to the market efficiency. The larger distillers already do it all themselves. They don't offer that opportunity. They do not sell their barrels for other people to age. They do not want people involved in their process. There are a lot of retail people that knock on their doors. They basically say no and turn them away. So this is not an easy opportunity. We had to actually work pretty hard networking through various distillers for us to find the right distiller that wanted to offer us their production capacity. And we are also picky. We didn't want to go to a generic producer. There are a number of generic producers that were able to do this at smaller quantities, but we wanted higher quantities and at an ultra premium level. So, and specifically for Wilderness Trail, they spun up the distiller about 7 years ago. That took quite a bit of money. They bought the land, and they've also bought a lot of the equipment and the build out and so forth. On top of that, they have been for the past 6 years putting away more and more whiskey. That is more of their balance sheet that is being used up. And because of that, I think that's a load for them that they have excess capacity that they can't use up completely. So because of working with us, they're going from a 5-day to a 7-day production process, and they're keeping their machines on for longer that they've already paid for. So for what it's worth, economically, that makes sense for them. It's a cash flow. It keeps the lights on. Also, on top of that, after they sell us the whiskey, they're also charging us for storage, and we're paying them a price for storage. This is another way of using up some of the capacity that they have in terms of storage that they would otherwise lay idle. To be blunt, real estate is relatively cheap in Kentucky. The benefit is that they're licensed to operate a bonded warehouse, which is federally regulated. It's a bonded warehouse for storage of whiskey, and they have the license to do that. So, they're taking advantage of getting extra cash flow from that. It keeps the lights on, it keeps their employees employed, and so forth. These guys are focused on things like that. They're focused on cash flow. During the pandemic, they actually, switched over some of their production over to making hand sanitizers for a while. They took the lead there and actually taught other distillers to do that. They actually won an award for their services in that space. With that said, making whiskey is more profitable. So as soon as they got that going, they switched back to making whiskey, and sales has been very good. So that hasn't been an issue for them. So from a market opportunity perspective, we are taking on a small portion of their total capacity, and it's excess capacity that they wanted to generate some shorter term cash on. I hope that is a solid answer for you. Any other questions? So I'll address one of the other questions I typically get. So the question is, kind of risk associated with holding whiskey and so forth. This is something that, I spend a lot of time doing research on, and part of what I was looking for when I went out to Kentucky. My first question was whether I can buy the whiskey. And once we decided, we had a supplier, my next question was, well, can I sell the whiskey? I've already gone through the analysis of who I'm going to sell it to, so I think everybody should be comfortable with that. We have many, many channels. We're not held back from it. We have no pre-existing contracts. I'm not limited to what I can do with that whiskey. We're owners, and we flush it down the toilet if we want to, but I mean, certainly wouldn't do that. But we have full rights over that. I wouldn't say surprising. The biggest risk that was told to us by distiller, managers, and also the Kentucky Distiller Association is actually fire. So in retrospect, after being told, it actually makes a lot of sense. We have a wooden barrel with 60% alcohol in it in a wooden warehouse. So, fire actually is a very big problem as a very big risk for them. I wouldn't say it's a big problem because they don't have lots of fires, but when they do, it's actually a very catastrophic thing. Jim Beam lost a warehouse of 44,000 barrels due to a fire, and they weren't able to even put the fire out. They basically let the warehouse burn to the ground, so they were just in cleanup afterwards. So that is a real risk, but their risk and our risk for our fund is we're going to buy insurance for the inventory. We're going to buy insurance that covers the full market value of the barrels, and we will pay annually for that. And the insurance does step up when the value steps up, but we've accounted for that. And that value we will insure. So if there is a fire, if there's any damage to the warehouse, there's an earthquake, tornado, and so forth, that's all covered by the insurance so that we get our money back. Just like Jim Beam got their money back. Obviously, I don't know how much they got back, but we'll be covered for everything. So I'm sorry, I was reading the other question that's coming in. So yeah, we're covered for fire. Another risk that I thought was going to be an issue was theft, and in retrospect, actually, it's not a big problem. So the barrels themselves are hard to steal. You have a single person, they can roll away maybe one barrel. Like we were saying, it's worth let's call it $5,000. It's not worth the effort to steal that. Also, whiskey in the middle of aging is of varying quality. So when you go into a warehouse, it's very hard to know how long these barrels have been aged, and very hard to pick the best ones to steal, I guess. So it's not an easy thing to do. And the biggest point actually is bonded warehouses are federally regulated. So if you steal from that, it's actually a felony instead of a misdemeanor. So it's actually not quite worth the effort to steal from a bonded warehouse. It's easier to go steal from a liquor store. If you shoplift from a liquor store, you probably get better whiskey and lower punishment if you get caught. I know that's a very cynical way of looking at it, but that is the reality of it. It's not efficient to steal from barrels from warehouses. So I'll set that aside. And those are actually the main risk factors that we've been looking at. We'll be supervising on a regular basis. I plan on visiting the whiskey on an annual basis. We have a consultant that will be looking at on a quarterly, if not more often. So I'll leave that there. I've got a few other questions coming in, so I'll try to address some. One person who fell off the webinar and came back on was asking what the incentive is for Wilderness Trail to do this as opposed to do it themselves. I've actually just answered that question while you were off the webinar. What we're doing is we're providing them with short-term cash flow that is helpful to keep their lights on. We're doing it on excess inventory that they don't have the balance sheet to do storage on because their balance sheet is tied up on the fact that they've paid for the distiller, they're paid for the land that the distillery is on, they've paid for the inventory so far for the past 7 years. So, happy to get into more details after the call. Feel free to reach out to me for a more detailed discussion there if you want. But basically, that's that. I have another question that is the life of the fund. The life of the fund is dictated by kind of my targets for where we want to unwind the fund. We're targeting 5 years. That's where our optimal point is. The first 2 to 3 years, the value is actually very low. The value of 2-year whiskey is very low. When it hits 3 years plus, you have kind of lower end whiskey that starts to hit the market. So there's a real market price established from year 3 on. We'll probably sell a few barrels from year 2, year 3, just to have a mark to market to say, okay, the value is of a certain level. And the bulk of our inventory, we want to sell at around year 5. Around year 5 is where we see the value kind of, I wouldn't call it peaking because it keeps increasing thereafter, but that gives you the fastest gain. And then year 5, year 6-ish is where you've captured most of the value. Between a year 6 and a year 5 and a year 6, or a year 6 and a year 7, you're not getting more money on the shelf in a liquor store, and therefore it's not quite worth the time to try to store that. Now, if you want to store it out to 10 plus years, there's value to be picked up again past the 2-digit, getting into to do 2-digit, 10 years plus. But economically, it doesn't really make sense for this fund. So to answer your question, we're typically targeting 4 to 6 years. We will probably collect enough back to return the principal portion around year 4. I'm not sure if our accountant will let us only return the principal and keep the rest in play, because obviously we'll only sell certain parts of the inventory and not other parts. So it will probably be a return of capital plus gains for the barrels that we hold and not the others. So if the question was tax related, I wanted to answer that fully. But I expect to unwind everything by the end of year 5, year 6. That's our target. Going long also doesn't help me hit that target IRR. So the longer it goes, the harder it is for me to hit. So I'm really not incentivized to go much further than that. Let me kind of go to the next question. The next question is there any contextual or actionable ability to increase the upside or amplify returns? For us, we started with good whiskey. I think that's a good start. We actually looked into financing. We're probably not going to use financing. Financing is one potential thing we can do. We could take leverage, buy even more whiskey, but the rates are very bad. And the financing people are actually happy. They spoke to me and they said, great, you have Wilderness Trail whiskey. It's high quality. It's much better than the generics. We're happy to lend to you. But the terms weren't very good. And I didn't go negotiate it because it really didn't give us the flexibility. It doesn't build out the inventory very much. So we're setting that aside. Are there other ways to increase the upside of this? There actually aren't that much. I think the value really comes from the aging process. And therefore that is, through the span of time. Now, if Wilderness Trail was to start selling internationally and they are a big hit, those barrels may be worth slightly more versus slightly less. But I don't think there's a big impact in either way. This market is relatively commoditized. And because of that, I think that's actually good because it's not creating kind of downside risk for reputations to be ruined, I guess, for lack of a better way of saying that. But we really are not adding value there. The other part where we're adding a lot of value is we're trying to find the best buyers for this. So these are the actions we could take. We can vary the time frame of when we sell the whiskey. We can vary the people we sell it to. We can potentially take the whiskey international and try to sell that internationally to specific buyers. So by being a little more active on the sell side, we're able to sell at higher prices. There's one other channel that I haven't mentioned very much, which is the enthusiast space. The enthusiast space will pay probably 2x whatever pricing that I've been talking about. The unfortunate thing with the enthusiast space is that they're only buying 1-2 barrels, and I'm talking about thousands of barrels. So there's a slight mismatch there, but we can certainly sell some of our barrels through the enthusiast space. So we're connected with the Drammers Club. We're connected with some of the other platforms that do whiskey sales and promotion that are more fan-based, and we could potentially go down that path. I've had a chat with Rally Road before about putting a project together to do some promotion more kind of on a little bit more on the collectible side, but our focus is not really in that space. So for us, it's really about a commodity. So and I think this is a good segue into another question that I typically get, which is, how do we look at our fund? How is that different from kind of the Scottish collectible whiskey fund and so forth? So let me kind of branch into that and talk about that a little bit. So I think there are a few funds. I know of 1-2 funds that are currently marketing and fundraising for Scottish whiskey. And their target is much more on the collectible side. They're going into the market, in the auctions market and so forth, and buying things that are highly priced and hoping for that price to move up even further. And their drive is really more on scarcity and in terms of just being able to sell that. We decided not to go down that space because we were concerned a little bit with some of the business models there. One thing is that it doesn't support very large sizes. There's a liquidity issue with regards to being able to sell large volumes of high-end, bottles and so forth. And the auction system isn't really set for, large-scale, tens of millions of dollars type of sales that we are planning on doing. So that is something that I have set aside, and I've decided that we didn't want to do that. The second point is that we're really on the commodity space, not the collectible space. And because of that, you can think of us as, like a barrel of oil, right? It isn't, we're not going to go promote that my barrel of oil is better than somebody else's barrel of oil. I mean, there are fine differences within the oil space. Light crude is better than, dark crude or heavy crude and so forth. And different regions have different qualities of crude and, more or less distilled. Anyway, so not to get into too much details, I used to run commodities, so I get into too much details on the oil side. But it is a commodity, and it's something that I think is actually more stable for you to think about from an investment perspective. What we're doing, the whiskey that's sitting in our barrel right now goes into bottles that go into the liquor store. The price of liquor at the liquor store is a lot more stable compared to the price of whiskeys that are going to auction houses and so forth. So another way of looking at that is I can right now back out some of the whiskey numbers. Actually, let's just kind of run through that exercise if you can indulge me for a moment. Right now in the liquor store, and you look at this online, Wilderness Trail whiskey sells for $50 to $70 a bottle, roughly, depending on exactly what it is and where you buy it from. So let's say $60 a bottle for ease of a calculation. 2/3 of that value actually goes to the distributor and the reseller. So I think it's slightly more reseller than distributor, but overall 60% of that, or 2/3 of that go there. So there's 1/3 of that. So $20 out of $60 go to Wilderness Trail, or in our case, go to us in our level. So at $20, if we're conservative and say the glass bottle, the label, the shipping to the distributor is, let's say, $5, which I think is conservative. We have $15 as an estimate for the value of the juice inside the glass bottles. If you take a 5-year-old barrel and you pour it out, actually what you're getting is 200 to 240 bottles per barrel. And that variation comes from, really the amount of evaporation and so forth. That's what they call the angel share, that the alcohol and the liquid actually decreases over time. So at 200 bottles per barrel, you're looking at $3,000. At 240 bottles per barrel, you're looking at $3,600 a barrel. Plus the used barrel, we can actually sell that for $100. So there's another $100 of value there in terms of kind of breaking down of that cost. So today you can look at the price on the shelf and know that that $3,000, in year 5 is a supportable number. I would venture to say that we're being conservative there, and our 20% IRR is also calculated on that conservatively for today. In 5 years, a 5-year barrel, we expect it to be much higher, and that's why we have a range of $3,000 to $5,000. So I'll set the math aside now. So basically what I'm trying to say is we're really a commodities fund. You're investing in a commodity that increases in value over time. That increase is very consistent. It's counter-cyclical, and therefore it's a great investment. And basically every single barrel achieves that. So this is not like a VC fund where 1 or 2 of our investments are going to do really well and the rest we kind of write off. Every single barrel increases to that value. And so that I think highlights the collectibles versus the commodities difference. And we're on the commodity side. We're kind of proud of that, and we believe that that's a good way to go. And the last point I'll mention on this particular topic is that we actually did some research on the collectibles side in Scottish whiskey and so forth. There's a marketing company called Knight Frank. They've been doing a lot of data in this. They currently collect pricing for 10 of the largest kind of collectible asset classes like whiskey, wine, fine art, furniture, jewelry, and 5 other asset classes. I'm forgetting all of them, but basically all of the high-end collectible things that people buy, as luxury products that are considered collectibles. And out of them, past 10 years, out of them, whiskey did the best. It's up 5.6 times over the past 10 years. So that sounds good, but compared to our product, we're looking at trying to hit 3 to 5 times in the span of 5 years instead of 10. So I believe that we have a superior return profile with regards to this. I'm going to move on to the next topic. I think, let's see, kind of moving down. So one other question was, the barrels I'm buying are on a rolling basis, and therefore when I sell, I need to sell on a rolling basis to get the age and so forth. As I mentioned before, the creation of the barrel takes 4 days. So that scaling is actually, scaled back a bit more. I think, we have made 1,000 barrels already in September. We're having some done in December. We'll make some probably early next year. But, even if it's a rolling process, we will be done with production probably at the end of Q1. If we get a super big order from someone on this call, maybe it'll drip into Q2, but I think we should be able to get all of that done pretty quickly. And then the aging process starts. I do agree that, if you're looking at year 5, that year 5, does that start a little bit later? Yes, it starts a few months later, but, we could probably sell some of these barrels at year 4.5. So we're back to kind of roughly the same time frame. So that's why I typically quote a year 4 to year 6 type time frame. And, we're itching to kind of get going. We've already ordered whiskeys, and that's why we wanted to do a final close and move on. I hope that helps. The next question was, if you sell your barrels into the international market, who handles that? Do you have a full-time person that handles the sales of your barrels? So typically for American whiskey barrels, or let's call it Kentucky whiskey barrels specifically, the buyers and the sellers have the conversation in Kentucky. So the buyers actually come to Kentucky to buy, as opposed to me going somewhere to sell. I think that's probably the best way to say that. And because of that, everything is relatively centralized in Kentucky. There are a number of brokers that will be helping me broker that. We will also reach out to international buyers, but at the end of the day, typically logistics are arranged where after we sell, the buyer side actually comes and picks up the whiskey and takes care of it. The logistics of the transaction can also be helped by the broker dealers who charge either side for that process. But basically the logistics are arranged. There's actually not much more that we need to arrange on our side to be able to do that. In terms of the coordination of the sales, I'm the portfolio manager. I will be speaking with the brokers to figure out the right timing for the sale and doing it. I don't need to actually, drive a forklift and pick up the barrels from the warehouse and deliver it. So, the financial side, I'm, more than confident I can take care of. The physical side, I think we will outsource it either to the broker servicing agents or the buyer servicing agents who would come and pick up. I hope that answers that question. And for any of these questions, with my answers, feel free to add on to, have any additional questions. Feel free to let me know. I think that's covering most of the questions that I've got here. I'm going to pause here to see if there are any other questions people want to put in. And once again, if you want to verbally talk about the questions, feel free to do your hand raising on this, and we're happy to answer the question verbally also. So, okay, I don't think we have any more questions. Once again, my email address is on screen. You're going to also reach out to Julia for more information. Please feel free if you have any questions that you want to talk about one-on-one, or if you want to talk in more detail with regards to how this fund fits into your investment portfolio. I'm happy to have a chat, or if you just want to talk about whiskey in general, happy to do that. And, please reach out to me or reach out to Julia when you get a chance. So I would like to thank eToro Capital for giving me the opportunity to speak with all of you. And I look forward to hearing from everyone.
And thank you for joining us today. This concludes our Q&A with the Wave Kentucky Whiskey 2020 Digital Fund. For a more detailed deck or subscription information, please let us know. We look forward to hearing from you. Thank you.
Great. Thank you very much.